Welcome back to another YouTube slash bootcamp slash BG trading video, and today we are going to be talking about SMT divergences. Okay, so without further ado, let's get into it. So an SMT divergence, pretty much all that it is so when two different assets, meaning two different pairs or two different, like, not stocks but like two different things, so in this case NQ and ES, so the Nasdaq and the S&P 500, they pretty much move correlatedly, meaning that they usually move the same. So if one goes up, most of the time the other one goes up too. Okay, however, an SMT divergence is pretty much saying that when one of them moves up, the other one does not move up. And you guys might be asking, well, what does this have to do with trading? Why is this helpful? I don't even care about ES. I only trade on NQ. And I'm about to get into that. Okay. So, if you guys have seen a lot of people put their charts like this, so they click this little square and they put it like this. So, what they do is they have MES open or ES in one of them, and then in the other one, they put NQ. And the reason for this primarily is to find an SMT divergence. Now, what is pretty much an SMT divergence? Actually, I'm just going to show it right here for you guys to make it really nice and easy. All right. So let's say we have right here, okay, right here, and then we have NQ here, okay, and then we have ES here, okay, perfect. So let's say NQ makes a low, and then it makes a lower low, okay, cool. Let's say ES makes a low and makes a higher low. Great. What do we see? All right. So we see that NQ, right, they swept this low, meaning that this low was lower than this low. Obviously, we see that. On ES, we see that this low did not sweep it, meaning it did not go under this previous low. So you can mark it out like this, okay? Now, you might be asking, why is this helpful, Mish? What does this represent? What is this what does this actually tell us? All this tells us is this, first of all, is a bullish SMT. And you guys might be, well, how is it a bullish SMT? I thought bullish was going up. Lows don't mean going up. Yeah, but this basically represents that ES, meaning this right side index, is a lot higher. So we have this initial low that we make on both pairs. We make on both indexes. And then, right, ES makes a higher low, meaning that ES is moving up, okay? Whereas NQ makes a lower low, meaning NQ is moving down. Okay, that's a divergence. Why? Because NQ is moving down and ES is moving up. Usually they both move in the same way. All right, cool. So how do we mark this out? Okay, what does this represent? So this basically means that ES is indicating that NQ is going to move up. And now you guys, I'm gonna go later. I'm gonna go onto the charts, and you guys are gonna see. Usually this plays out a lot. There was a crazy big, I think it was like a 4-hour SMT or something today, and I'm gonna just go over that because I feel like it's a perfect example of this. Okay, so same thing applies. Let's say we want to make, so this is bullish. Okay, I'm just gonna write this is bullish SMT. So a bullish SMT is off of the lows, and then a bearish SMT is off of the highs. Okay, so we'll go down here and then we'll draw this. Okay, cool. NQ, ES, cool. Let's say this is a bearish SMT, cool. All right, so for NQ, let's say we make a high, and then we make a higher high, cool, okay, great. ES, we make a high, and then we make a lower high. Nope, make a higher high, okay. So what do we see? NQ, we sweep out this high, okay? ES, we don't sweep out this high, right? What does this represent? This means that this is NQ is trailing, meaning it's behind, because ES is predicting that we move lower, okay? NQ is predicting that we move higher. So what is actually helpful to us? Because NQ is going up and ES is going down, the correct answer is to be looking for shorts on here, okay? For shorts, just because obviously we sweep the high, meaning liquidity is swept. There's no reason to be looking for longs in the situation when ES is already looking bearish, okay? And that's pretty much, what did I just do? That's pretty much a overview of that, okay? So let me show you guys what it actually looks like on the charts. Now I do want to say, let's say we have, right, we have whatever. So let's say we sweep this low on NQ. So let's say this is NQ. You guys need the NQ. Yes, okay. Let's say we sweep out this low. We sweep out this low on NQ, okay? But we do not sweep out this low. We don't sweep out this low on ES. Now this is not a SMT. Why is this not an SMT? I want to go back to the previous examples and show you what I said. All right, so SMT would be this, right? We sweep the low, and then we make another low. Okay, it's only applicable, meaning it only like counts if we make the secondary low. Okay, because obviously, as you guys learned in the trend video, when we're in an uptrend, we're obviously making higher highs and higher lows. Okay, when we're in a downtrend, we're making higher or lower lows and lower highs. Okay, that basically only, right? So we need to be seeing a low being made for us to actually take out this low. Because why is that also, like, why do we also need to be looking for that? Let's say, right, we have this low and we sweep it. We could just be continuing still bearish, and this is like a good like spot for me to talk about, right? We could just be continuing in this trend, right? But if we're going to get a reaction off of this, meaning that we make another low and then we continue higher, that's what we're actually looking for. Okay, so obviously we got to use SMT divergences in context, meaning we can't just blindly see SMT and just enter. Okay, but enough of me explaining, enough of me yapping. I'm gonna actually show you guys what it looked like to them. Okay, so I'm gonna erase all this. So let's say again we open it up, and then on our right side we have MES. We had, okay, so there's two types of SMTs, right? The highs, and then I also like to look at like indicators, meaning if there's a fair value gap that wasn't filled, that's also a sign that we are like disrespect or that we're trading or moving differently. Okay, so look, for example, we take out this gap here today. Okay, on NQ we sweep it, we fill it perfectly. Okay, we take this out. On ES we are yet to fill this gap. Okay, do you guys see this? Right, so we both see how, right, it made a move down and then a move up, pretty similar to ES. Okay, nothing is really that different, but we have yet to fill this whole price range, whereas NQ we filled this. Okay, what did we say? If it's off of the highs, meaning it's off of like this high here and this high here, basically means that we are moving bearish. Again, we sweep it here and then we don't sweep it here. Okay, pretty much that's all it is. And then what did this indicate for the day? Okay, we'll show you how market open went. Go to the 15-minute time frame. This is what market open looked like at what's today, the 22nd. This is what it looked like. Literally 3 straight Drake candles to the downside. Wow, how could you even catch this move if you're looking off of the SMT divergence? Okay, that's just a mini example. Okay, there's a lot more. Okay, so I'm gonna mark it out for you guys, so you guys can see it. Okay, again, let's say from here to here, right, we didn't sweep this high, and then you go from here to here, again, we didn't sweep this high, so this would not be an SMT because we didn't sweep this high. Let's say this high here on the right side, if you guys are seeing my mouse, went like this and then came lower, then this would be an SMT. Okay, just wanted to point that out. All right. Let's see here. Okay, again, cool, perfect. Off of the same thing. Okay, we see this high here. Okay, we never swept it. We make this like this high. Can't talk, my bad. So we make this other high, and we still haven't swept it. Okay, right? We're still trading. Whereas the same high here, we sweep here. Okay, meaning that we take it out. What do we see? We move downwards. Okay, we literally move straight downwards. Okay, great. Perfect example of that. All right, cool. Let's continue. Okay, let me zoom out. Now, again, this is probably most likely going to happen more on the lower time frames, because on the lower time frames, I mean, there's obviously more room for price to like fluctuate and move, because obviously in the long term these indexes usually move like together. So with that being said, like over a long period of time they're both like going up, right? It's just a small imbalance that you could catch a partial move on. That's why you're not trying to trade with the trend, because obviously you could just press buy on any one of these like 5 years ago and you'd be up a crazy amount of money. But if you're trying to get in for the day and get out, this is really going to be your friend. So let's go down to like the 5 minute time frame and see if we can find more examples there. We probably will be able to. Okay, cool. So let me see here. So how I like scan for them right here. Perfect. You just look at this high being made and you're like, do we sweep this high on Nasdaq? Right, we do. Okay, from this high to this high we go up. From this high to this high we go down. Okay, this is a bearish SMT. What does price usually do after this? We shoot straight down. Perfect. Okay, good example right there. Let's see. We see that nope, right? Another one. Okay, so we see this high here, right? We move past this high, meaning that we sweep it, so we go up on this high, and then so what is this high? Yeah, so this high here, and then we don't sweep it. Okay, so right, what do we do after this? We shoot down. Boom. Okay, cool. Now we're gonna be looking for bullish SMTs, meaning that off of the lows. Okay, so those were bearish SMTs because we were looking off of the highs, meaning that two highs were made and one of them swept it while the other didn't. Perfect example right here. Let me zoom in for you guys. So we have this low that we sweep, same low on ES, we don't sweep. Okay, from here to here, right, we sweep it, and then from here to here we don't sweep it. What does price do after this? What do we see? We move up. Okay, very, very helpful thing to know. Great, cool. Let's continue here. All right, there's not a lot of data there, and then yeah, okay. Right, like this isn't gonna happen every single time, but when it does happen, it's good to like mark it out on your chart and then just actually like see it. Yeah, this isn't it. Hold on, I remember this day. Okay, yeah. Okay, right here. So we see the slow. Right, we don't sweep it, and then we make an SMT off of these lows. We make it off of this low and this low. Same low on ES, we do sweep, and then we make an SMT off of this low and this low. What does price do after this? Shoots straight up. Okay, good to know, for sure. Good to know. Okay, let's continue. All right, I apologize for that. So right here, you know what, actually I'll pause the video and I'll come back. All right, we back. I apologize for that. All right, okay, so you're looking right here and then right here. Okay, so again we can see that, did we sweep it? No, we actually didn't. Cool. And this low, yeah. All right, so nothing there, nothing. You gotta keep scanning. Okay, I mean, yeah, there's not any here. It's probably because I'm looking at like London session right here. Nope. Okay, right here. Cool. This is an example of where it doesn't work out. So from here to here, okay? We see it from this low to this low, okay? All right, we see how NQ is moving up, meaning that we didn't take out this low. Whereas on ES, we did take out this low, so we're looking bullish. Yet, what does price do after this? It sells off completely. Now, why is this? Just because a 5-minute bullish SMT was made doesn't mean anything, okay? I want to show you guys an example of what wouldn't be an SMT. So, actually, you know what? I'm gonna go on. No, okay, forget that. I was gonna say I'm gonna go on FX to show you guys, but basically, what I just wanted to say out there is because I just see this online so much and it like annoys me. So, again, I already said this, but like, if you're going to be looking at a low that's being made, right? Let's say NQ or whatever, and you sweep out this low, this right here is not an SMT. This is not an SMT because we swept out this low, okay? So let's say this was a 4-hour low or whatever, 4-hour low, and then you sweep it, right? It doesn't mean that's a 4-hour SMT. For this to be a 4-hour SMT, you will need to make a 4-hour low that's different because ES is probably going to sweep it in the same 4-hour time frame. So even though we swept a 4-hour low, this could be like a 2-minute SMT, and that's why it's probably not going to have as much power. Okay, so that's what I wanted to say. But okay, how are you gonna actually use these indicators, right? So now we know what an SMT is, we know what it represents, and then we know what a bullish and bearish SMT are, and we know how they like actually move. So what are you gonna look at this for? Okay, so this is really good to set your daily buys because like today, right, we're in a crazy like 4-hour SMT, right? Because again, we didn't fill this gap. Oh, just remind us. Okay, we didn't fill this gap here, and then we have on NQ. So this was just a very bullish signal, right? To be bullish, or no, very bearish signal to be bearish on the day. Why? Because we didn't fill this gap. Okay, and that's what I wanted to talk about. Now I want to talk about like actual like, I want to say like fair value gap, like SMTs. And I know a lot of people do not teach this, and it's not really part of the bread blueprint, but it's just a really, really good indicator to just tell you where price wants to go, okay? Because, okay, I'm only saying this is because, let's say, right, whatever. Let's say price, okay. Right, we have like 2 fair value gaps, okay? 2 fair value gaps. And then we have another one below it. Let's say both of these are bullish fair value gaps on, right, on this move down, on this move up, okay? Let's move up here. Let's say we retrace in one of them. So let's say NQ retraces in the top one, whereas ES retraces in, wait, what did I just do? Bro. What am I? Alright, hold on. I just tried to do something tough, and that was not tough. Alright, guys. Okay, alright. But ES retraces in both, okay? This basically just proves that NQ, right, only filled orders in this top one, whereas ES filled orders in this bottom one too. So again, even though none of these swept out this low, we filled in an imbalance, meaning we filled more orders in on ES, right? So NQ is predicting ES to be bullish, not because of the lows, but because of the imbalance that it filled. Okay, and I wanted to show you guys, bro. I wanted to show you guys that just because I feel like it's important for you guys to know that it doesn't always have to be off the lows. Like if you use it in context, it's a very, very good like strategy. Okay, so we'll go back on the charts, and now I just want to show you guys like, let's say 5-minute. Okay, so on the 5-minute, let's say we have where would the supply do? Okay, here maybe. I hope it works out good. No, it's pretty. All right, here maybe, or you know what? I think it was actually not exactly where it was here. Okay. So if we go on ES right here, we see. Yup. Okay. Cool. So, right, we see this move up, okay, from this low to the swing high, move up, okay. We see how price is retracing. So, right, we retrace into this gap, okay, whatever. Am I the same, bro? I don't know, my bad, guys. It's way too late for me to, like, function. I gotta get this video out, and I'm done, bro. All right, so we have these imbalances, right? Okay, and then let's say, right, even though we don't sweep out this low, okay, we don't sweep out this low on both, okay. This isn't relevant because I'm pretty sure I remember when I was trading this, because this was at market open, like buy market open, we had like a 5-minute BPR that we tapped into here or something like that, or like a 5-minute for value gap, where we like didn't really tap into it here, okay. And that's important because right, we want to use narrative with that. So let's say we tap into that, okay, that means that NQ is filling more orders, meaning NQ is a little more bearish as of right now, and we see that because right after that we follow it up with a bullish SMT, right? But NQ sweeps the low, whereas ES doesn't. This is a beautiful signal that price is going to go up just because of the divergence. Okay, what does price do after that? Rip higher. Okay, beautiful. Right, quick little 15-minute SMT. Perfect. All right, so what else? I want to show you guys an example of, forget it, I'll show you guys in my live training, that's for sure. But that's pretty much it. Honestly, I don't really want to waste your guys' time, because all it is just, again, okay, an SMT divergence is two correlated assets, so usually NQ and ES, and it's when NQ sweeps a low or a high and then ES doesn't. Okay, so obviously it's going to be found on the lower time frames primarily, just because on the lower time frames, right, price doesn't always move the same between both assets. But when you're on the higher time frames, and it's like both of prices usually move up. Okay, so that's important to know. Other than that, when you want to use it, you can use it to base off your daily bias, or you can also use it on the very low time frames to prove where price is going, right? So if you're gonna be using it on like the 1 minute, let's say you're gonna use the 1 minute SMT, that's gonna prove on the 1 minute, that's gonna be your execution. You're like, I'm gonna wait for a 1 minute SMT or 2 minute or 3 minute SMT, and then once that forms, that's gonna show me if that's in line with my bias, and there's nothing else there's a reason where we should move down. Then that's the trade you're gonna want to take. Okay, so that's important. And then finally, just knowing that this was, I don't know why, but this was just a problem for me. Like when I first started learning about SMT divergences was, all right, if we're gonna sweep the low, this is bullish. Okay, make sure off the lows is bullish, and then off of the highs, let's say there's a high, and then we sweep it, this is bearish. Okay, so just important to note, because I feel like you could easily mistake it. And yeah, that's pretty much it. So don't want to hold you guys here for too much longer. That's about it. And without further ado, have a great rest of your days. I'll catch y'all boys later.